Welcome back to my channel, guys. This video is going to be a little bit about the market in the last couple of weeks, why it's been selling off, why we're all kind of panicking, which we shouldn't be, by the way, and how we can overcome it, how we can kind of see this in the future and see where we're going. That is Alan Shearer. See you in a bit. So let's get straight into it. The market, why is it selling off? What's causing it? Obviously, all of these parts are my opinion. Take it with obviously your own risk levels and just kind of take it in however you want to take it in. So for me personally, it's bond yields, it's headline manipulation, recovery stock transfer, new investors panicking, and just general correction after the last 4 or 5 months. Now I'll dive a little bit more into them. So we've got bond yields rising, which is causing people to move their money, especially big people, moving their money into the bonds because obviously they're kind of increasing their yields, which makes sense to a certain extent. Also kind of part of that maybe would be the big boys taking their money out at high levels because they know it's going to crash, because they've had experience with this before. Let's be honest, it's happened for years. One of these happens every kind of once a year, according to my sources, my research, if it's up to scratch. Next one is headline manipulation. So you've got all these headlines by big news companies, CNBC, anyone really, not necessarily them, I'm not pinpointing them, but they're kind of headline manipulation, so it may make you think I need to sell all my stock, it's crashing, you know, it's all this, get rid of it. It just sends people into a panic, and we don't want to panic, you know, but as long-term investors we want to keep our money in there, average down if we can, and just ride it out, just stay strong, hold the wall. Okay, we should never be investing what we can't afford, let's put it that way. Okay, so next up is recovery stock transfer, so people moving their stocks from high growth, tech, especially tech. Tech has been hit. Yeah, so moving their money from those industries into kind of recovery stocks, so airlines, banks and all that, especially with the rising interest yields. New investors panicking, so that is basically people like me and you. We've only been investing for 4 or 5 months, sometimes 9 months, when obviously the first initial crash last year because of COVID. We're new investors, so we're not too experienced. We haven't seen this sort of correction before. There's a few people that I've seen on Twitter that haven't seen it for many years. It's been a heavy, very fast correction, but it's almost good like that because it just kind of gets out of the way, in my opinion. So you've got new investors panicking, so they're taking out their money. I highly recommend you don't do that. Maybe do that if you've got like a really high percentage on a stock and you've had it over the last kind of 4 or 5 months and you still have 100%. That's fair enough. And the last reason is just a general correction over the last 4 or 5 months. The last 4 or 5 months have been great. Let's be honest. We've all made a lot of money and we're all kind of just seeing it disappear. So we need to take this opportunity just to ride it out, and then it will be back. I still believe it will be a very good year for the market, obviously with the recovery stocks and just general kind of new investors, new hype, and all the money that's going to be pumped back in with the stimulus checks in America, etc, etc. So what do we need to do to get ourselves through these corrections in the future? Obviously this one's kind of coming to the end now, in my opinion. And we saw a very big V shape yesterday. I'll put a little screenshot up here of the V shape. I've got it actually on my phone. Of the V shape we saw yesterday in the Friday's market. It's the biggest V that we could see. If we go back to the month here, you can see that little V at the bottom right hand corner. It's the biggest kind of reversal. So hopefully that reversal kind of comes back and pushes on, and the stock market can recover, because we all need that, let's be honest. Anyway, going back to what we need to do. So risk transfer is a good option. So if you're particularly quite high on a stock, maybe it's time to just kind of take that risk away and take a little bit of profit from that and then move it into one of your lesser performing stocks. Something that's down quite heavily, especially like tech stock that's, as I mentioned before, been hit quite hard in this correction. So maybe it might be time to, there's plenty of good prices out there. It's like everything's on sale, it's great. Maybe average down in those positions, and obviously then in the future, and you come back to it in a couple of months, you'll see some higher gains. At least that's how I perceive it. Next up is buying all the dips. Now this is kind of a controversial subject because obviously you can go in and buy all the first dip. And if you bought the first dip, looking back at the charts, we have the first dip was on, if I could just operate my phone, it kind of happened on the 22nd of February, the first dip. Now if you bought on that first dip, you may have thought, great, I've got myself a bargain, but then it kept dipping. Now my advice for this is to have a sum of money on the side, and I have learnt this myself within this correction, so I'm not saying I've done this, I'm not perfect, nothing like that. So have a bit of money on the side that you have within your portfolio. So don't obviously put it all in. Keep some as cash, maybe 30-40%, depending on what strategy you're going for. And then wait for a correction like this, and then just drip it in day by day into your favourite stocks, favourite long-term stocks. I wouldn't necessarily talk about swing trading at a time like this. Slowly drip feed it into those stocks, and then when you see the reversal, like we saw yesterday, at least in my opinion, obviously I'm a new investor, but to me it looks good, that reversal. And then with that, even if you catch it on the reversal and kind of coming back up, that's okay too, because it's still one hell of a bargain. So yeah, buy the dips, but on a consistent basis, and drip feed it in, because at the end of the day you're still getting a good deal, in my opinion, because all of these stocks are on sale. Now this one's the most important one for me. Do not sell your stocks. Okay, so unless you're up really high on the stock and you feel like this is kind of the peak it's going to get to and I kind of want to risk transfer it, that's fair enough. But your long-term holds, your Tesla, your NEO, your Palantir, your kind of Disney, your Apple, don't sell those. You don't need to sell those. They're going to be around for years, they're going to bounce back, and let's be honest, you're kind of going to retire early with those stocks. So do not sell any of those stocks. If anything, you'll be adding money to them, buying the dips like we previously mentioned. So do not sell those stocks. Now if you absolutely have to, then that's a conversation you need to have with yourself. But in terms of an investor, you need to keep your long-term stocks and ride it out, put up your walls, go for a walk, watch a new Netflix series, do whatever you can to take your mind off it, don't open the app, and then when the correction kind of ends and then you see the reversal and it bounces back up, then you can start looking at it and being a little bit more happier. So with these tips to get you through the future crashes and corrections, etc., it is important to know why you're investing. Don't forget why you're investing. You're investing for your long term, your retirement, your kids, etc., your legacy, whatever. And don't forget that, okay? So this is a short-term correction, happens once a year on average. And this has been a particularly harsh one, but that's only because the last 4 or 5 months have been so good. You've got to see that natural dip in the market. It's normal, it's natural, it's healthy. And then there's been a few factors that have hit this one. It's kind of like, let's take a kitchen analogy for example. A market crash is basically your boiler breaking and you're like, oh my god, the boiler's broken, what am I going to do? But these little corrections are, you spilt the sugar, you missed a bin with the tea bag, you left the hob on for a few hours. It's things like that have mounted up, and these are the little corrections. I don't know if that's a good analogy, but that's the one I'm running with. Okay, now you're probably asking me, how long is this going to last, Shaun? How long is this going to keep dipping? It's hurting me, etc, etc. The truth is I don't know. I don't know how long it's going to last. It may have already finished, okay? But all I know is that I have a fairly strong mentality of how to get through it, how we're going to get through it together. So believing in the methods that I spoke about a minute ago, so like the risk transfer, buying the dips, not selling your long-term holds, etc. So you've just got to stay mentally strong throughout these periods and just kind of stick to your guns, stick to your game plan and ride it out, okay? One thing I will mention before I go is don't feel bad about getting slightly higher prices, especially if you're a long-term investor. So if you're worried about getting Tesla at 700 and it's dropped down to 600, in the long term it's not going to affect you too much. You're still going to make a lot of money. You're still going to make a ton of money on something like Tesla in the long term, because the grand scheme of things, the percentages are not going to be too different. If you can average down, then go ahead, that's fine. But just don't worry about the slightly higher prices. I've done it. I went in at Tesla at I think it was 850. And then it dropped away down to 600 the other day. But in the long term, it's not going to matter, My average price is still 570, so I'm kind of okay with that. But obviously it could have been a lot lower, but it doesn't matter. In the 5-6 years time, I'm not going to remember this conversation that we're having now. So I hope you've enjoyed this video about the kind of market selling off and why it's selling off and what we can do to kind of prevent ourselves from losing money in the future, or kind of risk management going into future corrections and crashes. Let me know in the comments down below if you took value from this, what your experiences have been in the last couple of weeks, and maybe you could share them with the other people in the comments. That'd be really helpful, so then obviously we can kind of build together that kind of momentum going forward. Now let's hope for a really good week next week in the stock market. I want to see lots of green days, and let's hope for the future. As always, don't forget to like the video, I really do appreciate that, and don't forget to obviously subscribe to the channel if you want more kind of updates regarding the stock market. I do have a channel update video coming soon where I miraculously have longer hair. I cut this myself, by the way, with the help of my girlfriend. Anyway, so yeah, my next video is going to have longer hair. That's not important. So yes, make sure you subscribe to the channel is what I'm basically trying to say to you. Thank you very much for watching, and I'll see you in the next one. Take care, guys. Also, now's a good time to get yourself a free share using my links down below. Now, the Trading 212 has completed, they've halted their sign-ups, but Free Trade hasn't. So if you get into Free Trade, you get yourself a free share, and it'll be a very good price right now. Let's be honest. So yeah, make sure you do that. Basically, don't forget investing. Don't forget investing. What does that even mean? This is such a good tea.